Hello, good afternoon all, and welcome to the session today. We have a number of people busy joining us, but for now, welcome to the third webinar in our energy transition series. I will be running a quick introduction for everyone, also while we are waiting for people to join. And if there are any questions, please, of course, drop them in the chat. So in February, we launched this particular series with a webinar that focused on smart manufacturing, which explored the differences between smart and advanced manufacturing and South Africa's adoption of technologies and the opportunities that lie within the within various special economic zones, SEZs. So that was in February. And then in April of this year, we hosted our second webinar, which explored the energy transition itself with a strong focus on hydrogen. We unpacked the various opportunities for Salman Bay as a green hydrogen hub, particularly given a lot of the other work that is being done around the country, and unpacked a few reports that have associated Saldanha with hydrogen, where the IDZ has been consulted as a national stakeholder on the JZP4G report that helps position green hydrogen in Saldanha, as well as CSI report, and sort of taking into account things such as the Hydrogen Society roadmap and others. If you happen to miss these webinars and you want to catch up on them, they've been recorded and kept on the SBIDZ YouTube channel, and the team that I'm working with will kind of drop the link to that on the chat here. So today's webinar is focusing on opportunities in Southern Africa in the oil and gas, renewable and hydrogen energy sectors. And importantly, this includes the social and environmental impacts of the energy transition and really unpacking the cause and effect of this accelerated energy transition. So, trying to go beyond just your traditional topics and really sort of get to grips with a broader kind of set of topics. And so our aim with this webinar series in general is to create more awareness of these different concepts and topics, to help people have, more informed debate and discussion and decision making when it comes to the issue of the just energy transition, and how we move from one energy source to another. We're also very keen on building partnerships with others in the space that, with people who have similar interests, that we can leverage synergies and really ensure that this transition towards a cleaner kind of energy environment is both just and effective. So just a few housekeeping rules before we begin. So everyone's mics have been muted for the duration of the session. We encourage you to comment and interact through the chat box throughout the session. But if you do have any questions, please drop them into the Q&A box, which is just to the left of the chat box at the bottom of your Zoom screen. During the Q&A session, your questions will be directed to the appropriate panelists. And should you want to ask your questions directly to a particular panelist, please raise your hand and the team behind the scenes will unmute you. And of course, webinar etiquette will be shown on the screen through this process. So to get the engagement going, we wanted to launch the first poll of our day, and we're going to try and make it a little bit more interactive. And so we'd like to understand why you've chosen to spend the next 90 minutes with us. And so a little poll has popped up, and if you can please take a moment to respond to that. Wonderful. So it's really great to see that there's a large number of people, seeing that ultimately we want to kind of create more depth and sort of knowledge around the energy transition. I think this is really important. And it's of course closely connected to just generally learning more about the topic. Speaking of the speaker lineup, so our panel today consists of a range of different industry experts. And so we really encourage you to engage and send your questions through the Q&A box. And I will be introducing them shortly. My name is Davis Cook. I'm the CEO of RIIS, which is a boutique consultancy, who's been doing a lot of work together with the Saldanha Bay IDZ to build an innovation-focused cluster in the region, looking at the maritime and energy sector. So joining me today is Derek Boulware. So Derek is VP and Head of Africa Research at Welligence and Energy Analytics, with more than 15 years of experience in the energy industry. He's delivered projects in 22 countries, which includes leading on a number of oil and gas strategies. So Derek, you can quickly say hi.
Good afternoon, everyone. Nice to be here. Excited for the conversation.
Wonderful. Thank you so much, Derek. Next up is Gaylor Montmasson-Clair. Gaylor is a senior economist for sustainable growth at TIPS, which is the Trade and Industrial Policy Strategies Institute. He's been working on and conducting extensive research into green economy issues for more than a decade. Gaylor, if you can wave and say hello.
Hi, everyone. It's a pleasure to be here. Looking forward to it.
Thank you so much. Ipeleng Selele is a group CEO at RIIS Trade and Investments. She's a qualified international strategist in cleaner energy, amongst other things, and has been playing a pivotal role in driving the agendas of cleaner energy, energy infrastructure, gas market studies, African ports, and the maritime development. So Ipeleng, if you could say hello.
Thank you. Thank you, Davis. Hi, everyone. Good afternoon.
Wonderful. Thank you so much. Rethabile Melamu is the CEO of the South African Photovoltaic Industry Association, SAPVIA, trained professional in chemical and environmental engineering, and has over 15 years experience in areas including clean energy, green economy, and environmental sustainability. Rethabile?
Good afternoon, everyone. It's great to be here and looking forward to the conversations. Thank you.
Wonderful. Thank you so much. And the last panelist joining us today is Zanele Salman. She's the low energy carbon solutions business developer at Sasol. She's been involved in leading a number of multi-billion rand projects in the petrochemical industry and in others, and is passionate about seeking solutions to enable decarbonization in manufacturing for competitive, sustainable growth. So Zanele, a word of hello from you.
Hi, everybody. Thanks, Davis. This is a great opportunity. Looking forward to the discussion. Thank you.
Wonderful. Thank you so much. So I think that there is an enormous amount of insight and wisdom on this panel, and we are looking forward to trying to get into your heads as much as we can over the next 45 minutes or so. So maybe if I can start, Derek, with you. What do you see are the kind of recent developments in Southern African oil and gas as a sector?
Thanks, Davis. I think it's been really interesting over the last year or so because we had limited activity in oil and gas, partially due to COVID-19, but also due to lower commodity prices. But over the last year, things have really started to pick up. We're starting to see a lot of new discoveries in the region. Last year, we saw a big discovery in Côte d'Ivoire, which is the Ipeleng discovery that E&I made. It's one of the largest discoveries in Côte d'Ivoire in many, many years. So that was exciting to see. And then, as most of you probably are aware, we had two major discoveries in Namibia very recently. So that's the Graph and the Venus discoveries. So those are quite exciting. We know that they're there and they're being evaluated further in terms of appraisal wells. But also things like the Kudu gas field in Namibia has recently come to new light because it was discovered in the 70s, and there have been about 5 attempts to monetize it. And BW Energy seems to have a solution that might actually work to actually bring that field to production and to monetize that gas. Other things that we're excited to see and things that are happening in terms of activity. We're looking at Recon Africa also drilling onshore in Namibia, although that's in an environmentally sensitive area in the Okavango. So there are some questions around whether or not that will actually be monetized or come to fruition. And likewise, similarly in Zimbabwe, near the border with Mozambique, Invictus has been awarded a special grant and will be drilling a well in likely in August. And what we see coming there potentially is massive amounts of gas. Initially, Mobil actually did the seismic surveying there in the 70s, but saw that it was gas and decided there was no market for it. So now Invictus has picked the special license up after Robert Mugabe left, and the president of Zimbabwe awarded this special grant for them to do some exploration. They're saying it could be 8.5 TCF of gas. And then even more recently, last week, they've actually upgraded it to potential 20 TCF of gas. And just to maybe put it into context, from a South Africa perspective, Moss Gas in Mossel Bay ran off of 1 TCF of gas for nearly 25 years. Other big things, Mozambique Area 1, which is the LNG project being led by Total Energies, still on hold with force majeure based on the militant activity happening up there. It's not looking likely that that project will get back online in terms of progressing the construction until maybe next year. We're still plugging ahead with the Brulpata discovery offshore Mossel Bay here in South Africa. We're expecting it to get started in 2028. And then I think another interesting sort of development is that we're still seeing a planned well in the Q3 of this year here in South Africa on Block 2B, which is next to the block which contains the Ibibesi gas field. So will be interesting to see the results of that. And interesting as well, despite you know, some of the court cases that people might be aware of related to seismic studies off of the Wild Coast and Shell sort of suspending activities, this Gazania well that's being drilled by Eco Atlantic now on this Block 2B is going ahead because the seismic studying has sort of already been done and dusted. So lots happening, and I think with commodity prices high, we'll continue to see activity in the oil and gas sector across the continent.
Thanks, Dirk, and some really useful insights that I want to come back to in terms of the opportunities for oil and gas. But maybe if I can go to Rethabile now. If we look at renewables, what do you see as the investment trends that we're seeing in Southern Africa from a renewable perspective?
Thank you very much, Davis. And once again, thank you very much for the opportunity to share my thoughts on the trends in the renewable energy sector. Let me preface my input by saying what we have seen as a catalyst in this space is a friendly, a conducive regulatory framework and market design. And we've seen it really play out excellently in the South African context through the Renewable Energy Independent Power Producers Procurement Program. I'll just call it a RIIS because that is a tongue twister. I think just for information for those that may not be as familiar with the space, is that over the past 10 years, there about 6.3 gigawatt of power have been procured through that program alone. We are seeing trends and increase in the distributed generation space, and I'll talk about it a bit briefly. What we have seen increasingly in the South African space, as I indicated, in addition to the RIIS program, is that the prices of renewable energy has gone down drastically. There are some market corrections due to the increase in commodity, as the previous speaker has indicated. But by and large, if we compare the prices in 2010 to what they are in 2022, I think there's been close to 100% drop in prices, in renewable energy prices for the South African context. What we are seeing is that governments are now committing increasingly to the national determined contributions. Most of the countries in the SADC region have commitments at the back of the Paris Climate Change Conference. And so that policy commitment will drive the uptake of renewable energy programs, project in general. But just to give you a sense of what has happened in South Africa as an example of the trends is that in the last bid round alone, we have seen an awarding of about 25 projects, and the announcement was done in November last year, October, November last year. None of these projects have come online, but there is a commitment to bring them on, to at least sign the PPAs by the end of July. That's what the IPP office and the Department of Minerals and Energy has committed to. We, just from those, that window alone, we are likely to see an investment of $3.3 billion. And that would augment or be in addition to more than, I think, 20 billion US dollars in rands. The investment to date is around 210 billion rand, and about 30 to 40% of that comes from solar PV. I alluded to the fact that the prices have decreased drastically. We are in bid window 5 alone. We've seen a weighted average cost of about 47 cents per kilowatt hour of electricity, of energy. And interestingly, in the South African context, while the major players in terms of provinces has been the Northern Cape, Eastern Cape, and the Western Cape, we've seen new projects coming online in Free State and KZN for the first time. And we are now seeing an uptake of onshore projects. Most of the wind projects in the South African RIIS program have been offshore. There is a 140 megawatt project that has been awarded in bid window 5 that is now offshore. Just to conclude my input, some of the trends that we have observed in the region around hydrogen initiatives. We know in South Africa that the HISA program has commenced way about 15 years ago, as far back as 2008. And we have seen some traction around green hydrogen with the participation of industry players. We've also seen that there are possible investments in Namibia. We do understand that the Germans or even the European market is ripe. At least that's how they are positioning themselves for import green hydrogen. On the small, medium scale side, there are initiatives that RIIS is driving in the region, specifically the climate platform. That's a form of a marketplace, and there is a program called REAP the program is called Soaring, that REAP has implemented in Tanzania and Zambia. It was implemented in 2019, and the objective of that is to design and implement a prototype approach for preparing small to medium-sized clean energy projects. So there's quite a lot, Davis, and I see as you come in, I know it's my time to stop talking. But essentially, there is a lot that is happening in the renewable energy space, and really quite exciting is the development around distributed generation. I'll stop here for now. Thank you.
No, thank you so much, Rethabile. And I think, immediately one of the really interesting things I see is that there is a growth both in kind of traditional energy sources, oil and gas that Derek was talking about, and in renewables. So I think this is going to be an interesting debate topic. One of the items that you mentioned there is around the growth of hydrogen-related projects. And so, Zanele, I'd like to ask you, what are the main hydrogen projects that are currently taking place in Southern Africa? What is their stages of development? Where are we as a kind of hydrogen-producing nation?
Yeah, thanks. Thanks, Davis, for the question. As you know, Sasol is very has come out and said that they would like to be a lead integrator in terms of green hydrogen development in South Africa. So we are tracking some of the projects that are ongoing in the country and globally as well. And we've also are engaging in terms of evaluating some of the projects ourselves in terms of participation. So the ones that I can speak to at the moment is the Priska. We've got the Boulware green hydrogen project, where Sasol is working together with with various partners, and that project and is currently in pre-feasibility, and it's a key project, and we see it as a lighthouse project in terms of green hydrogen development in South Africa. The project aims to produce green hydrogen and green ammonia and other derivatives, mainly for exports. We've picked up activity. I think everyone knows about the Kuha green hydrogen and green ammonia project that we've picked up in the media as well. And there's some activity as well in Namibia. So for most of these, we're not really sure at the stage whether they're in pre-feasibility or feasibility, but there's been several announcements in terms of partners that are participating in the project, varying from local partners and also some international, particularly European partners. And to lead on to what Rethabile had said, I mean, majority of the drive in terms of green hydrogen exports at this point as a market as Europe mainly. We've seen also some developments in Asia, particularly China and Japan, and the US as well. So a lot of the projects and activity that we're seeing are mainly directed at producing green hydrogen derivatives for exports, looking at South Africa's position globally and where it is, and just the mostly established routes to get to you know, the various countries where there's already arrangements in terms of trade. And we see, you know, mostly opportunities in terms of establishing green hydrogen hubs have been identified throughout the coastline of Southern Africa, with some local opportunities identified. I think the challenge at the moment with most of these projects is that majority of the local opportunities for green hydrogen are far, quite a distance from the coastlines, and where green hydrogen is mainly required for decarbonization. That is strategies and initiatives that a lot of the, particularly the mining and industrial sector companies have put forward going into 2050. And yeah, Sasol is exploring some opportunities in line with the strategy that has been communicated and the set goals that we've put forward as a company, and requirements for those will be you know, at progress, and our participation in the projects will be communicated formally to all stakeholders once we feel it makes sense to do so.
Zanele, if I can just double click on something you mentioned there. So, you know, what do you think is our kind of advantage in playing in the hydrogen economy? You know, of course, platinum is an obvious one. You know, we have access to platinum, that you know, but maybe you can sort of explore that a little bit more. But like, why else are we well positioned to kind of compete in the hydrogen economy where we are?
Yeah, I mean, from the work that we've done as a team, I think we've identified 4 areas where we see South Africa having an advantage. And it's really based off natural resources, endowments that we have, based from solar, wind, and also available land where we can carry out these developments. I think that's key. And that's one major, I think, advantage that we have. And second, South Africa is geographically well positioned as a hedge market. and with, I guess some of the global trading partnerships that we have with the countries that have expressed needs to access green hydrogen. We've got, as you mentioned, Davis, we've got mineral reserves and processing capabilities from both the mining and industrial, sector point of view. We've got well-developed industries. We've got access to technical skills and experience that will ensure that, we're able to develop as a country in terms of green hydrogen. And from Sasol perspective, I think we've got deep experience in FT technology, and Sasol has been producing grey hydrogen for many, many years. And that, I think, is a big advantage for us in terms of our know-how and abilities when it comes to handling and understanding, hydrogen. And Sasol also has experience in producing chemicals and fuels as well. And so that also we see as an advantage that can be leveraged to put South Africa in a best position to develop as a green hydrogen economy. From the country's perspective, I think, taking into account the economic situation where we are at the moment, where we're really desperate for job creation, we're really desperate for projects that will enable the economy to grow, looking into the future and in a sustainable manner as well. So we see green hydrogen as a great opportunity for South Africa, looking at obviously what we have and what we can play with, and positioning the country for green hydrogen hubs. And we see some local opportunities with companies that are looking to decarbonize and access green hydrogen for their own operations. And Sasol is one of those. I think it's at the top of those list of industrial companies locally that are looking to for alternative sources of energy that will enable the achievement of the targets that have been set for 2050. We see, about 400 million tons per annum of demand globally for sustainable fuel. We see about more than 200 million tons per annum of demand for things like sustainable steel. I think that's one industry that both for local and exports. There's 670 million tons per annum sustainable ammonia requirements globally that we see South Africa being able to tap into those markets. And so we're pretty excited about the opportunities that green hydrogen, presents for South Africa specifically, and basically for our industry, and what we have to play with. We believe it will position us to be able to produce green hydrogen and green hydrogen derivatives competitively and be able to compete globally as a country.
No, thanks. And so I want to kind of dive a little bit into the bigger international component as well. And so Rethabile, I wonder if you have some views here. South Africa is very well positioned in terms of renewable energy production, but if we look at Europe, at the moment they're going through some very obvious challenges. We see, with the war in Russia, in Ukraine, Russia has kind of, stopped Nord Stream. And there's this regression back to opening up new coal-powered stations in Germany, for example. There's been some work in Finland to push back against, for example, onshore wind, because the turbines interfere from a defense point of view. So there's a little bit of a regression that we're seeing in regards to the shift to renewables in Europe. How does that affect us here? Like, does that give us more of an opportunity to export some of these these kind of greener products into Europe? Do we see that European renewables is sort of regressing as well? How do you see these international developments at the kind of global scale affecting our renewables program, which is of course fundamental to a green hydrogen program?
Yeah, sure. Very interesting question, Davis. I think in the immediate term, we are seeing opportunities for exporting our fossil fuels. And we would have seen a lot of interest by Europe, specifically Germany was here about a month ago to sign up some coal agreements with the country. So in the immediate term, we see export of our fossil-based fossil fuels into Europe. I think that we are unlikely to see export of renewables in the short term. That will only happen in a couple of years' time, and that is likely to come in the form of green hydrogen, given some of the developments that are happening in the space that Zanele has highlighted. What we are likely to see in the Southern African region are possibly delays in the implementation and uptake of renewable energy projects. And that's really because we have seen price increases of commodities which filter into the prices of all components. And the renewable energy sector is not immune to these slight increases. That being said, the renewable energy costs still remain competitive. And I think it's just an immediate delay that is likely to abate if the geopolitical issues and challenges that we're facing abate in a couple of months, hopefully in a year or so. So we are likely to see delays more on the utility scale, but not on a distributed space. In the South African context, Davis, the current crisis, the Eskom crisis, enables those that are in the distributed and commercial spaces to still exploit the opportunities that the crisis presents. But I think in the long term, we're also seeing a lot of focus on decarbonizing of the sectors. And I think Zanele really stole some of the thoughts and ideas from me, because I was going to really talk about the decarbonization of the likes of Eskom, ArcelorMittal, which will ensure that these industries become competitive globally. They export some of their products, and for them to remain globally competitive, they need to green their processes. So those are some of the trends that we see. And lastly, at Davis, I am hoping that in addition to the Ukraine challenge, we have seen how disruptive COVID-19 was of our supply chains, and the need for us to consider localization of some of the components. And the hope is that the localization will then, of the components that we can realistically localize, will stimulate the economy that was badly battered by COVID-19 and create a much needed job and contribute to employment imperatives that the country has. So there are good and bad. We might experience delays, but they're not going to be in perpetuity. But we also hopefully get some stimulation around economic development through localization.
But I think that is a great actually pass through to something that I want to ask Gaylor about, which is, we were talking about localization, about global competitiveness. This very much speaks to the idea of the energy transition and ensuring that it is done in some sort of just manner. So Gaylor, your insight on the just energy transition that South Africa is going through, how are we preparing for that? And where do you think South Africa is in its ability to be just in the transition process?
Yeah, Davis. I mean, it's a hot topic. Yeah, it's a hot topic. The just transition agenda is we're in the middle of it at the moment, and very much, actually at the front line globally, and that's quite interesting. In a nutshell, of course, it says that we have a transition going on. We want it to be just and inclusive. We're going to make sure that it's not vulnerable stakeholders, communities and people, small businesses that actually carry the brunt of that transition. It's moving in multiple directions. We now have actually, as a country, a just transition framework that was developed by the Presidential Climate Commission. And we also have a number of other institutions that are developing their own framework. The Department of Mineral Resources and Energy, the province of Mpumalanga is also developing its own framework because, of course, the iceberg, the top of the iceberg of the transition is on coal, and most of coal is in Mpumalanga. And that's starting to guide the thinking quite strongly. The Just Transition framework, there's a lot of positive in it. It really provides a broad definition of just transition for the country. There's 3 key principles that are embedded in that. One is participatory justice. It means we must have a process that's inclusive. So the decision-making itself must be inclusive. And that's quite important. It must not just be decided in Pretoria, in Joburg, and Cape Town, but actually be with the people on the ground who actually are going through this transition. We must have what is called distributive justice, which means that whoever is going to lose their job or their livelihood should be supported so that they don't actually end up being worse off through the transition process. And that's quite important for whoever works in the coal value chain, for instance. But of course, it's an economy-wide and society-wide transformation. So we need to think about that more broadly. And then the third aspect is restorative justice. And it says that we need to use the just transition as a way to address our historical legacies of unemployment, high inequality, and high poverty. And that's quite important. At the same time, it's firmly embedded in climate science. It's putting forward an ambition for South Africa to be climate neutral at a net zero carbon emissions by 2050. And that's quite important. And it's doing quite a great job at identifying, the risks, who's at risk, what sectors, and then who are the stakeholders who are at risk. It was recently published and handed over to the president, and it's going to cabinet as we speak. So hopefully that's going to become the official framework for the just transition in South Africa. We also have been having a lot of discussions around the finance. And one of the things maybe you heard about is the $8.5 billion. That's a deal, that's a political deal between South Africa and a number of partners in Europe and the US to provide some finance for South Africa to transition. Lots of negotiations around this. And of course, it's a drop in the ocean of funding that we're going to require. But it could be quite catalytic for South Africa and actually other countries to get that right. And certainly it's opening the discussion around, okay, how are we going to finance this just transition? Who's going to pay and for what? But of course, still lots of work to do. And one of the things is that, of course, our just transition is not in law yet. And our objectives of being, on a net zero pathway by 2050 is not in law. And that's something that we still need to push for. There's no full agreement on just transition going forward as well. Some vested interests, those who are set to lose effectively, are still resisting. That's understandable, but we need to deal with it. And then lastly, implementation, is still lacking. We need to get underway. We're not putting the policy frameworks in place. We've done a lot of thinking, but now let's get cracking and create those new jobs and get the transition underway.
Thank you. So I certainly want to jump into the implementation question because it is critical for us to understand. But we heard Rethabile talk earlier about the development of a renewable friendly policy environment. And we see this just energy transition framework that's being developed. So Derek, one of the things that I'd like to maybe understand from your perspective is we've understood that there is a policy like this positive policy environment for renewables. And we understand that there is this kind of to be legislated framework around the just energy transition. When we think about the kind of policy and investment frameworks on the oil and gas side, which is the other side of this equation, what do you think are the kind of strategies as a country that we should be taking to promote Southern African oil and gas development in the context of, you know, our nationally determined contributions and commitments to climate, you know, Paris Agreement and so on? So where do we need to change on the oil and gas side, or to think about from the oil and gas policy side within this broader context?
Thanks, Davis. Yeah, I think it's an important question. I mean, we're obviously sitting at this transition space where we need to move from one side to the other. But I think everyone needs to realize, obviously, it's not a tap that can be just turned on and off. You know, especially if we don't have, you know, the technology needed to completely move over to, you know, a more renewable energy or greener side of things. And, you know, the reality is that, you know, green hydrogen jet fuel is not around the corner. So we're not going to be flying planes on, you know, wind energy and solar. You know, planes can't run off of batteries. So we do have to realize that we need to prepare the right sort of legislation in order to start making this transition. So I guess first and foremost, you know, just in general, we still have issues with policy and legislation, just sort of to continue as we are. So, for example, as many of us know, the MPRDA in South Africa has been pending revision since 2013. You know, they keep indicating that we're moving in the right direction, and you know, we've got another iteration happening right now, which may prove, you know, to actually come over the line, but it's happened before as well. So, you know, what's needed in terms of incentivizing companies to want to be in this space and to produce, you know, oil and gas, as it were, in Southern Africa, there needs to be some clarity on what it is that they're going to be receiving in terms of the economics. It needs to make sense for them, because at the end of the day, they have, you know, a global portfolio potentially that they can be choosing from in terms of where they go with their money. The other thing that we do have as an issue currently in sub-Saharan Africa in general is that many of the major oil and gas companies, super majors, you know, your Exxon Mobils, your Chevrons, Shells, etc., they're actually looking at divesting a lot of their African assets because they are so carbon intensive. So in this transition to a more net zero future, they're going ahead and saying, you know what, Africa, it's such a frontier area for me. You know, there's not enough infrastructure for me to maybe electrify my operations and make it a less carbon intensive operation. So, you know what, actually, let me just dispose of those assets and sell them to somebody else who might be interested in picking them up. So we're kind of left with a bit of a void as well in terms of who's actually going to be able to buy those assets, produce them responsibly in an environmentally friendly way. But I would say, you know, just in general, privatization is really, really important in the oil and gas industry. I think the more that governments sort of play a role that is a different role to what they've traditionally played in Africa, wherein they don't necessarily have to invest the capital themselves. They don't have to be directly involved in the projects. You know, we see this, for example, I mentioned earlier with the Kudu project in Namibia. BW Energy is now proposing a solution which excludes NamPower as an investor, but rather NamPower becomes an off-taker of the power that gets generated through the gas that gets produced in a near-shore project. So they're not even talking about building it on the land in Namibia, rather they're talking about a near-shore project. And this has been the sticking point for the whole time, is NamPower just didn't have the finances to be able to invest CapEx into this project. So the more we see that happen, I think the more that we'll see things progress. The same is happening now in South Africa with Total Energies. You know, they've gotten involved across the value chain. So they're in Mozambique. They've got the LNG project that's going to progress hopefully further from next year. They've now got the Matola gas project near Maputo, to, where they're actually going to be able to bring LNG from the north of Mozambique, and then they'll be able to inject that gas into the Matola project and then have it flow over to the border into South Africa via the pipeline. So if we start to see more privatization, more companies taking things into their own hands and not letting governments sort of hold up and, you know, necessarily be sticking points, I think we'll also start to see, you know, more of this sort of starting to grease the wheels and get things going. I think the other important topic that we need to just highlight here is also just public education when it comes to, you know, what is the oil and gas industry actually doing. It's always very difficult for those of us who operate in the space to educate the public on, you know, what are the actual implications of doing seismic studies? What are the implications of producing, you know, gas out of the Karoo or fracking the Karoo? You know, it's very difficult for us to give an expert opinion on what's happening or what actually does happen through those processes, because we're seen as, you know, being invested in wanting it to happen, being seen as invested in the industry itself. Whereas on the other side of the equation, there's potentially, you know, not as much understanding of the processes, but, you know, they're pro-environment, so, you know, it's sort of who cries loudest, so to speak. So I think more education is needed in this space as well.
Yeah. No, thanks, Doug. So one of the things that I want to pick up on, and Ipeleng, this is something I'd like your kind of opinion on, is there's been a couple of comments around, you know, we have the right strategies, we have the right kind of policies, or that they're being developed, but who actually executes on these? Like, you know, do we have the skills to deliver against these? Do we have the capabilities as a country to actually do this?
Thank you, Davis. Thanks for that. And thanks for the opportunity for us to be able to present today. Maybe I'd like to touch on what Gaylor said. I think implementation is going to be key, because if you observe to date, and I think rightly so, we have been talking and talking and talking and talking, and I mean, that's normal. That's you know, part of the game. I think what is crucial, especially for us as entrepreneurs, implementation is key. And as you said, Davis, for us to be able to implement, we have to take stock of the skill sets that we have in the region. And I know we talk about South Africa a lot, and I'm glad that the session is about Southern Africa. And I'm going to talk a lot about, to refer to Namibia and South Africa, because we participate in many other African countries, but I'm going to use, for the purpose of the Southern block, I'll use work that we're doing in Namibia and South Africa. Now, from a skill set perspective, Davis, I'd like to point out that this is an essential process of the transitioning of the green economy, and it's going to disrupt, in fact, it is already disrupting the labor market, and it will require reskilling, upskilling, as well as the repurposing of skills. As we are aware, I mean, if you look at the as we call them, the ghost towns, the communities where predominantly those communities have been relying on coal, and people have been living on the back of earning a salary or earning a living on the back of the coal economy. What are we going to do about that? So whether we have a plan in South Africa, only God knows. But I will refer a lot more on the work that we're doing with Namibia. We partnered with University of Namibia, because we realized that we cannot be, to your point, talking about strategies but not working with academic institutions. So what we decided to do was we then partnered with University of Namibia, and also signed up with the Wits Business School to ensure that we understand the types of modules that are going to be put together, and are not necessarily going to be put together by the academics themselves in isolation of talking to the industry. So what we try to do is we ensure that industry does give input towards the modules that are being covered, because we are on the ground. And also, being a non-executive director on Siemens Energy Board, I'd like to also share that Siemens Energy, we have a center, it's called a Power Academy in Germiston. And for us, we also recognize that if we don't have pilot projects to be able to ascertain the feasibility of green hydrogen, we can talk until we're blue in our faces. If you look at where Germany is and what they've done and how many pilot projects are in Germany, pilot projects that are in Belgium and Brussels. I've visited a couple of these facilities. If we don't have proof of concept, we'll simply just be sitting in our fancy offices and just talking. So I think what's important, as one of the speakers said, was that public education is quite important as well. Over and above looking at professionals, we have SMMEs, we have women, we have our youth. We have to make sure that they're not left behind. But there's also a big job of educating our public, because when we look at some of our projects that we're doing, we're decarbonizing 3 ports in Africa. And part of that decarbonization process, we are doing an assessment around the communities, or looking at the communities that are around the ports, purely because you cannot go and produce a molecule. You are producing, but yet infrastructure is not green. Not only that, we have to test the adaptation of the communities and the operations that are happening at the ports. So as an entity at RIIS, as you might be aware, we started off in the maritime space, because I think there's also an important need to ensure that the conversation is an integrated, well-integrated solution. Because when you hear people talk about green hydrogen, you don't really hear them talk about the ports. So the question then is, who's going to, which infrastructure? Remember, we can talk about producing green hydrogen, but if we don't ensure that the port specialists are also part of this conversation, who's going to actually, which infrastructure is going to facilitate or deploy or export this molecule that we're talking about? So what I find as well in the conversations that we've been having over the years, or past 2-3 years, is that there are some key elements that are missing in our conversation. We've got to be able to understand how ports are green and how ports are going to facilitate this. And also when you look at the skill set must actually cover the end-to-end value chain, from infrastructure, molecule, manufacturing capability, technology capability. And as I said, probably also typically because of my orientation as an entrepreneur, we need green entrepreneurs. And I think I've heard Minister Patel allude to this many times, to say, for us to, because if green hydrogen is meant to industrialize, where are the industrialists at the table? Where are the industrialists at the table? So I'll leave it at that, Dave, because I've got quite a lot to share. And I'm not sure if you're aware that we're also working on a pilot project in Saldanha, where we are going to be looking at green hydrogen, particularly for mobility. And maybe to Zanele's point, Zanele, RIIS is developing Sasol strategy in Namibia. So RIIS and BFS were appointed by Sasol to develop the Sasol's entry point into Namibia with regards to looking at green hydrogen opportunities. So the other key thing out of the well-integrated conversation I was talking about, it is looking at that connectivity. So if you look at Boulware and you look at our map and how close Boulware is to Namibia, you can't have 2 countries that are saying we're competing. There's no competition. So we've got to be smart at how then are we going to integrate the 2 countries to look at the different strengths. Others will probably have off-takes, obviously because of the industry that we have, or companies. If you look at our mining sector, just that on its own in terms of decarbonization, they play an important role. So when I listen to a lot of conversations, we also miss a point of not looking at how well integrated we are from a regional perspective and looking at the strengths, because Namibia also, they've got lots of land. Namibia also is actually ahead also in terms of producing green hydrogen. Boulware is also doing the same thing. So I think what's going to be critical is looking at how we're going to integrate as a region, because when you talk to off-takers in Asia and Europe, they're saying South Africa and Namibia, can we just also at least get a holistic story? Because if I'm going to take off-take, so how do I then work with Namibia and South Africa?
Yeah, no,
Thanks,
thank
David.
you. Thank you so much, Ipeleng. So I'd like to open it up to everyone for some questions. So firstly, to all the speakers, thank you so much for sharing your insights. There's a number of, I think, really important discussion topics that have come out of this. So the first question actually comes from Fundo, which is to Derek. And that's asking about what your views are on the Total discovery means for the Southern African region.
So thanks for that. I think we are in a bit of a competitive space now, because of the situation I mentioned or referred to earlier with regards to the court decision on seismic studies. Total Energies also has now made the Venus discovery across the border in Namibia. And where the competition really that I refer to comes in is just going to be between where they focus their efforts in terms of their actual operations, as well as where they focus their investment. So we still believe at Welligence that the Brillpotta discovery, along with Leipert, will continue as planned. So we've got it at a 2028 startup date. We believe that the most likely solution will be to convert the capabilities of the Moss-Gas or PetroSA refinery in Mossel Bay to be able to accept the gas and condensate quality that will be coming out of Brillpotta and Leipert. And that will be the first phase, with a second phase of development coming potentially with a pipeline to PE. So there will be gas that will be monetized. We'll potentially be converting some of it into synfuels as they did previously with Mossel Bay or with Moss-Gas. And certainly some of that gas should be available to flow into a gas to power type solution. So it definitely can transform the economy to some extent. They also do believe that within the Brillpotta discovery or within the block itself, there's something called the Pottafissi Fairway. And instead of drilling that as traditionally would be done to explore that, there's a lot of confidence on the Total Energy side that it actually does exist and that the gas is there. And so they're planning within the process of producing the existing discoveries to go ahead and appraise that and hopefully be able to produce some additional gas. So there's some major reserves sitting there. And yeah, I think things will likely progress and we'll see that being used to the benefit of South Africa.
Thank you, Derek. So another important question that's come up is around skills. Zanele, maybe if I can check you, there's a lot of work that Sasol have done in terms of understanding the hydrogen economy and the space in South Africa. How do you kind of see the development of relevant skills as a necessary prerequisite to the growth of a green economy sector, whether that's in hydrogen or steel or whatever the case is? How do we build those skill sets?
Yeah, I think that's a great question, because obviously, especially when you talk green hydrogen and you see where the technology is and its application, and you look at the whole operation from, in the value chain of developing and building green hydrogen and producing green hydrogen derivatives. I mean, you require a variety of skills. And we see, any player in the value chain will not have all the skills that will be required to really get the green hydrogen, either green hydrogen or derivatives to the customer. So from a renewable point of view, there's specific skills that are required there, and an experience that is needed to develop a more efficient, and a more competitive way of producing renewables. Because what we've seen in terms of the investment case for green hydrogen in particular, the cost of renewables, as well as the potential for the sustainable products to attract a premium pricing in the market. Those two are really the two key areas that require optimization for you to be able to deliver green hydrogen or the derivatives in a competitive environment. So you require the skills to optimize your operation, to ensure that you use the right technology, and that you build, with the right economies of scale to enable, your investment case to be attractive. So skills plays a huge role in that, and we see it as more various skills playing throughout the value chain and being brought in to add value. At the moment, the Sasol strategy is we use our own, obviously, internal skills and expertise based on what we've developed from a Fischer-Tropsch technology, and also what we know about producing synthetic fuels and chemicals. And we're working also together with a variety of higher education institutions in South Africa to support and sponsor research in various elements that we've identified as requirements to enable the investment case for green hydrogen in South Africa. But there's also the opportunities to leverage what's being done outside of South Africa, because obviously there's there's development all across the globe, and there's variety of projects at much further stages than where South Africa is at the moment. And it's about leveraging those experiences and leveraging also the funding that's gone into that work, and making sure that it can be redirected to South Africa and South African projects. But the role of tertiary education and tertiary research and sponsoring and supporting that and bringing that closer to project development, I think it's something that's crucial, that will put us in great footing.
Thank you. And so, just building on that, Gaylor, you mentioned that the Just Energy Transition Framework that's been considered has these three pillars around participatory, distributive, and restorative justice. I think that the question of skills is very closely connected to that, right? Because in terms of like education, awareness building, it allows people to meaningfully participate in the discussions and sort of have an informed discussion. It also allows them in future, when there are new opportunities being established, that they are able to participate in this from a kind of employment income perspective, and so that it's not purely on the technology side, but that there is a real redistribution of value creation. So, what do you think are the things that will determine our success in that transition process? So, if we get things wrong, what are the things that we can get wrong that will be, really bad for us? And what are the things that we really need to get right?
Sure. It's a $1 million question. I think, we know our starting point, and it has been quite highlighted, in the discussion. It's significant socioeconomic challenges, and also one of the most carbon intensive economies in the world. So I think what we can get really wrong is hindering the transition, or trying to hinder the transition, because the transition is coming. It's happening globally, not as fast as it should be, but it is happening globally. If we are not realizing that there's this transition on the way, and we don't, decarbonize fast enough, we don't build the skills fast enough, we don't support our businesses to transition fast enough, what's going to happen is that our access to finance and our access to markets is just going to be curtailed going forward. It's already happening as we speak. The European Union is setting up a border carbon tax, a carbon tax at its border. Anything that's going to be exported to the EU in the coming years will be taxed from a carbon basis if it hasn't been taxed domestically. So it's very clear. If we don't decarbonize, we're going to live on a very sorrow island, and that's going to be increasingly difficult. Of course, the flip side of that is that there are tremendous opportunities, and I think to our target, of course, the long-term aspirational target, you could almost summarize it as zero carbon, zero poverty. That's very aspirational, that's very high level, that doesn't really tell us where we're going. But we must use the Just Transition Framework and agenda as an impetus for change, for action. And here there's really a lot of opportunities that have already been alluded to. Are we going big on those opportunities? We spoke about green hydrogen a lot already. We spoke about Namibia. Namibia is currently developing a project for green hydrogen of $10 billion $10 billion. It's the current size of their GDP, of their economy. It's one project, okay? That gives you the scale at which they're going for it. Of course, it's different context, but they are going for it big. So are we ready to go for it big in South Africa? That's the case with renewable energy. Are we ready to unlock that potential that will connect to green hydrogen, and then that will unlock the decarbonization of all of our other industries, chemicals, steel, cement, automotive, and so forth. Are we ready to go big when it comes to improving our services and our infrastructure, when it comes to access to modern energy services, but also water, sanitation, transport? These are all part of the just transition. We need to really capacitate our municipalities and the state to improve those things. Are we ready to actually implement this in inclusive fashion? So that's just not top down, people in a room in Pretoria making decisions, but actually we're having a discussion. The way the just transition framework was developed started to do some of that. A lot of underground engagements, a lot of discussions, social dialogue, but can we carry that through implementation? Are we ready to do what it takes when it comes to some of the environmental liability that we carry? Mining, we still have 6,000 what are called derelict and ownerless mines in South Africa. That means abandoned mines. 6,000 of them to this day that remain to be rehabilitated. That has to be dealt with, and we're adding new mines to this list on a daily basis. So, we have a lot of milestones along the way, in terms of what we need to do. That starts also with finance, of course. Do we put our money where our mouth is? Are we ready to phase out the funding going to fossil fuels and ramp up the funding that's going to renewable energy, but of course also other areas, be it health, education, transport, and so forth? So, I think it's a two sides of the story. Do nothing and face the consequences economically, socially, environmentally down the line. We can't stop the transition. If we're not proactive, we're going to face the consequences. It's going to be bad. Flip side of that, if we're proactive and we accept to seize the opportunities that lie ahead of us, we have a lot of potential going forward, lots of things going for us in the country and in the region. So of course, I think it's non-negotiable. It's a no-brainer that we should go for it. Makes sense economically, socially, environmentally. So I think that's the call to action, effectively.
No, thank you. So, Rethabile, I wanted to ask you, you mentioned when you were speaking earlier that, your view is kind of short-term continue to export fossil fuels, longer term there's an opportunity for export of various green products. And you spoke also a lot about the localization of production and what we're doing. I guess I have two questions to you. One is, what do you think are some of the constraints that we face around localization? Is that skills? Is that access to finance? Like, what are the challenges that will help us to localize and build out value chains more effectively? And Ipeleng also spoke about a whole value chain approach. So what are the constraints to localization? That would be the one question. The second question is, Derek mentioned that, a lot of this new technology hasn't been developed yet. And, particularly from the point of view of the Saldanha Bay as an innovation campus, what are your thoughts around the development of local technologies that help us in this energy transition process? Because it's, that is also an important component of localization, that it's not just people and money, but that there's also technology that becomes localized. So, what are your thoughts on those two ideas?
Well, thanks, Davis, for those questions. To respond to the first one on challenges around local manufacturing, I think the main challenge is that we don't understand the extent and the nature of the challenge. We are mainly speculating on what the challenges could be. The one is access to capital. And the one that is talked about or highlighted a lot is the issue of commitment, and I'll use an example, the renewable energy sector as an example. Market certainty, and market certainty is an outcome of a firm policy commitment from government. If I use the RIIS program, we know that there was a lull after bid window 4 and for about 3-4 years. And before that, there were a number of companies, especially the solar PV companies, that had opened up manufacturing facilities, or at least assembly facilities in South Africa. And those had were mothballed due to the lack of activity and uncertainty in policy direction. So those could be some of the reasons. What we are currently doing at SAPVIA is we have commissioned a local content study, and that study is meant to help us understand where the opportunities lie across the entire value chain. So that when we are asked where the challenges are, we can really respond with confidence and based on empirical data from those that are manufacturing, from policy developers and implementers, and those ecosystem players. So if you ask me this question again in 2 months, Davis, I will be more empowered because I believe that empirical information, doing proper studies, understanding where the issues are, and not just where the issues are, but where the opportunities are, is critical to making progress with regards to manufacturing. So there's an issue of new technology and new technology development. In my view, supporting tech innovation is an art, and it's taken for granted that technology innovation just happens. It takes a very long period of time. There has to be a long-term commitment. For a company to take any concept to the market, to commercialization stage, can take up to 5 years, especially in the technical space. And there needs to be an understanding that they need a number of things: strategic infrastructure, where do they operate? Where do they then fine-tune their proof of concept? Where do they build the commercial prototype? Because typically an entrepreneur that is starting off does not have that kind of the capital that is required to set up, for instance, a manufacturing facility. Where are those shared manufacturing spaces? And also business development. Where are the skills? And I know we've spoken a lot about skills. Where are those skills? People that know how to develop other entrepreneurs. It's taken for granted that you can run a 2-3 day workshop, teach entrepreneurs to pitch there and then to present before investors, and boom, the business just happens. It just doesn't happen like that. The market, to access to market, it requires effort. It requires a deep knowledge of the ecosystem. It requires people who can maneuver, understand the policy, the regulations, the licensing, have intimate understanding of the sectors within which they operate. And I mentioned access to funding last, because unless you have something to sell, you have where to produce it from. If it's a product that needs to be produced or a service that needs to be offered, it's no use getting access to finance. Yes, you might need it to fine-tune your product, but finance that will then unlock big opportunities only makes sense when you have a product and a market to sell it into. So first, this technology development and innovation, it takes a very long time to develop. I speak passionately about it because that's what I did in my previous life. And I know what the challenges are. And the fact that innovation, it's so topical, just like all these terms and terms that we use today, just transition. They fall, as the youth would say, in the same WhatsApp group. We believe that we understand what they are. Technology innovation is a tricky one. Commercialization of it is even trickier. And those that support technology innovation need to be trained. I'm convinced that it's a science. And we don't take that into consideration in designing and implementing some of these programs that aims to assist these technologies to market. And lastly, Davis, I just want to address the issue of green economy skills, because I saw it crop up in the chat box. I think it would be important to first define what the green economy is, and that is not a sector. In my view, it's a philosophy for growing an economy. It's a transition. So for that reason, it's pervasive, right? The principles of green economy apply in the energy space. Hence, we have a renewable energy sector, or in some quarters, we have some level of decarbonization within the fossil world. It's applicable in the agricultural sector. It's applicable in the tourism space, in the tertiary sector. It's all about, you know, what kind of energy source are you using, how efficient is your process, and, you know, whether that pursuit is just. So those are the key elements. And for that reason, I think we can be so narrow-minded in thinking that the skill set that we require for a green economy are located in renewable energy. Yes, because to a large extent they are, because decarbonization is largely predicated on getting our energy mix right, but it's applicable. So I think what is required in the skills is to open the young people to a multidisciplinary type of skill development schools, right? Those that are engineering need to learn all sorts of energy technologies. Those that are in the legal fraternity needs to have a good understanding of legalities around water and sanitation and renewable energy. That applies in the tertiary spaces. So let's not bog ourselves down into this green economy being a sector, because it's not really
Sure.
in a typical sense a sector.
Yeah.
Thanks.
No, thank you. So I think you touched on the one part of the innovation space, which is very much the kind of you know, the smaller entrepreneurs and so on. I think that the challenges you raised there in terms of, you know, for example, you can't just train someone for 3 days and, you know, they're an entrepreneur. There's a lot that goes into that. The other side on the innovation question is the bigger institutional innovation. And Zanele, you know, Sasol is one of the biggest, you know, R&D and innovation firms in South Africa. You know, what is your view on kind of the large scale institutional innovation that takes place? You know, it's not just Sasol, but if we look at the kind of work that would be done through the universities, if we think of, you know, Anglo American and Komatsu, you know, have developed the big hydrogen powered LHDs. So these are like big institutions. How do you think, as kind of corporate South Africa, we can help drive innovation that supports a just energy transition?
Yeah. So I'm trying to think. So I mean, you know, Sasol's model has always been, as I understand it, that you work, you get your skills from example, the bursary program that Sasol has and that it runs. Every year you sponsor engineers, scientists, and accountants that study towards a particular field and specialization. And research and technology development the past couple of years has been a key emphasis, particularly for engineering and science skills from Sasol's perspective, in terms of training those from sponsorship and bringing them into the organization to add value and to help assist in terms of, you know, going into a more sustainable future for the company. So I think that model has worked really, really well for a company like Sasol, for example. Myself, I was one of the bursars for Sasol way back when I sponsored all my education, actually. And I've been able to work for the company for more than 12 years and made a contribution in terms of the work that I participated in and then I've done. And I think that model still works. And I think there's still value in terms of having models like that. And the other part of the model is working directly with tertiary institutions and sponsoring research projects and also specific departments that focus on catalyst development, for example. So there's value in that model. And that model for Sasol, my understanding is it works with specific South African institutions and some global institutions as well, where you can bring in some international skills and knowledge and know-how and bring it into the organization and add value in the company, thereby adding value to development in the country. And there's various programs also, I think, that are valuable, talking to incubation of industrial entrepreneurs, for example. So there's various models in terms of how that is done. And Sasol has a couple of programs where we're targeting recruiting industrial entrepreneurs and incubating them in a facility where they're able to test and develop their ideas and assist them in terms of all the skills that are required to run a business. And access to market is always an issue, obviously, because you have to compete and your product has to be of the certain value and offering that the market will decide to purchase that. So it's getting the entrepreneurs on that journey and give them the capabilities and as well as the support that they need to then become established industrial institutions. So there's various areas and programs in terms of doing that. And in terms of transitioning, the industries and looking at decarbonization, I think there's definitely internal conversations that we're having in terms of how do we structure, the current programs to enable the future of a net zero economy, and how does the company contribute towards that? So we've got a number of projects that we're obviously looking at, and some of the things I can't share at the moment because are in the development phases, but it's all regional and looking at what you need to then develop a green, for example, green hydrogen hub. So when we talk about our projects in terms of green hydrogen, we talk about green hydrogen hubs for a certain region or part of the country, which means that you will have your operation and the value chain participants that you need and the various partners that you need for your, your investment case to make sense. However, you still need to look at the surrounding areas. How do you empower the economies? How do you bring the various stakeholders to be part of the project and not just, people that you need to handle so that you can progress with the project? How do you build these hubs in such a way that it's a lot more inclusive, where you can leverage the local skills and expertise, but still being profit focused and contributing back to those economies? And how do you bring from other regions the skills and the funding that is required and the expertise that are required to make these hubs work for the company and for the country as a whole? And that's really how we're looking at these projects at the moment. And it's evolving because obviously you're trying to develop a project, but you need to look at it in a more a broader scope. And we found that the way we look at these projects, we've had to look at them a lot more differently than how we used to look at projects previously, where it's just the technology is known, what the market is, what the market requires, you're familiar with the regulatory environment surrounding your business. And so we have to look at this differently in terms of bringing partnerships, for example, and partnering with various stakeholders to make the project work. So I'm out of time.
Thank you. Thank you, Zanele. So, yeah, I think I know there have been a number of questions asked. If we don't get to them, we will seek to try and respond to some by email so that everyone does have a response to them. I maybe wanted to just kind of ask Gaylor to respond to one other question, which is around whether or not we have the appropriate fiscal and regulatory frameworks that support this transition process. So Gaylor, over to you for a couple minutes.
Yeah, I can see we are nearing the end, but it's a big question, but maybe a couple of points on this, because it's a really important question. We cannot force people to invest, but we can incentivize companies to invest where we want investments. And if you look at the fiscal side, we still see a lot of support going into what I would call the wrong sectors. There's still a lot of support towards fossil fuel. Just in South Africa, there's direct support to fossil fuels equivalent to about 2% of South Africa's GDP. So gigantic amount of money that's going towards those industries, much more than is actually going towards renewable energy or electric mobility or whatever other sector actually you can think of. So are we supporting the right sectors? And I think that's an important question to do that from a fiscal perspective. The other side of the coin is carbon pricing. We've started to introduce carbon pricing in South Africa, but it's still much too low to actually trigger proper change. It's starting to get some signal. And we do need to be careful, of course, in terms of the social implication of it. But again, are we targeting through our fiscal policy the right kind of incentive? And then on the regulatory side, if we just look at renewable energy, because that's the topic of the day and that links heavily to green hydrogen, we see that we've made some good progress in some areas, but there's still a lot of gray areas that are holding up the sectors. If you look at small scale embedded generation, we have only about below 30 of our municipalities that actually enable people to, have embedded generation and sell back into the grid. That's not a lot, and even then it's quite constrained. That's the quickest way to bring electrons into the grid, by the way, if you want to solve the current load shedding. Embedded generation, a net metering or feed-in tariff is the quickest way to do that. So we should be incentivizing people to do that, and in corporations as well. So still, a bit of a gray area on that front. Then when it comes to independent projects, we've made some good steps by increasing the limits where you don't need a license to 100 megawatts. That has really led to actually a massive increase in projects over the last couple of quarters. But we need to accelerate this. It's still a bit, cumbersome, and there's still some challenges around how projects need to be. And then lastly, on the RIIS program that, of course, Rethabile has spoken about, it was heralded as one of the best programs when we launched it in 2011. But we know it has been haphazard at times. We had problems from 2015 to 2019. Now we're facing some problems with Window 5. There needs to tweak that program to actually make it really effective, and have our rounds coming every year consistently, so that we enable the rollout of renewable energy and also support our manufacturing and industrial development objectives. So lots of positive steps, foundations to build upon, but we still have a lot of work to do to make sure that the fiscal and regulatory framework is conducive. And of course, I was just talking about renewable energy, so many other sectors to look at as well.
Wonderful. Gaylor, thank you so much. We are up on the clock, and so we are at the end of the webinar for today. So before we close out, there is a very brief poll that we'd like to ask, which is whether you'll be joining us for the next and last webinar in our series. More on that to to come in time, but it will be on this topic of renewable energy and progressing some of the conversations and debates that we had today. You know, for me, I think some of the key kind of insights that came through here is that this very much is a transition, right? We're still seeing the development of new oil and gas opportunities and projects, while we're seeing an increase in the uptake for renewable energy. Another important topic is around policy coherence. And, you know, are we able to build a holistic regulatory and legislative framework that allows not just to sort of adjust energy transition, but allows us to also, you know, address our kind of immediate needs, whether that's employment, whether that's energy production, but there's policy coherence. And the third really interesting topic that's come up for me is around partnerships. And we heard around the potential for stronger partnerships that Ipeleng mentioned between Namibia and South Africa. Zanele spoke about the kind of partnered approach that Sasol takes with local institutions. There was a discussion around a whole value chain approach that we're taking. So I think, you know, one of the important lessons coming out for me here is the more we're able to build a coherent and inclusive approach towards this, the more successful we will be in creating a globally competitive kind of country and sector, and enable a just transition to take forward. So I'd like to thank today's speakers for sharing their knowledge with us, as well as the audience. There's been some great questions coming through, and as I mentioned, we will try to respond to those separately. As mentioned, today is the third webinar in the series focused on the energy transition. Please do keep an eye on your mailbox and our Saldanha Bay Innovation Campus LinkedIn page for the next webinar. We look forward to seeing you at future events. I hope you have a wonderful day further, blessed with electricity and warmth, and look forward to seeing you again online soon. Thank you so much, and be safe. Bye-bye.